And here we go. All right, everybody, stocks back, the numbers, welcome back. And I wanted to do a quick update here on Roku Incorporated, ticker symbol ROKU, listed here on the NASDAQ. Stock 75.69, down about a point and a third, 1.7% on the day, down a little bit more, 0.25% after hours. Recently had a big pop just the other day on news from a Wedbush analyst, supposedly floating the idea of a potential team up and collab with Trade Desk, who apparently developed their own OS operating system for TVs. And we know that Roku is kind of not really dominating the space, but it's a big player in the space, and we're consistently seeing some decent numbers come out on the stock. So let's take a look at what's happened since we last looked at it and how we currently feel about the situation. So I did a couple of updates. Well, we first started looking at it, maybe it was like April or something. And I kept updating, and I remember, I think I spoke about it maybe like around here when it dipped down into the 50s. And I said, in my opinion, that is probably an overreaction, especially given the consistency of the company's previous earnings reports up until that point, and of course since then. And we can see that the stock recently ran up to about that $80 mark, took a big hit with earnings, as it usually does, and then bounces back and has a nice rebound. So in my opinion, I'm expecting here in the technicals for it to get back to potentially this line right here, looking like about 81.80. See how we spiked up and then we came down to that bottom before bouncing, and then we gapped down. So I'm looking for that bottom right there. You can see top left of the screen, the O, the H, the L, the C. That's the open, the high, the low, the close. You can see the low, 81.80, and we almost got there. But in my opinion, that's where it may be going. But we looked at it, I think it was like the end of August, I believe. And we can see that the earnings report that came out right before we looked at it a couple of weeks, we can see a nice EPS beat. We can see a nice revenue beat. The revenue has been steadily increasing quarter over quarter, year over year. They're getting into more and more households. They talk about consistently posting like record amount of hours spent on the devices. So we know that, well, again, nothing's guaranteed, but in general, I'd say, in my opinion, we know that this is a growing situation that you may want to be a part of. And we can see we beat on revenue by over 30 million. We posted a loss of 24 cents. Analysts were expecting a loss of 42 cents. So we're keeping our expenses and our losses in check. We're getting closer and closer to net income positivity, and the revenue consistently keeps increasing. We can see that this company reported earnings over a month ago, and my apologies, but we've been looking at obviously a bunch of other things, but they reported earnings right at the end of October, and we can see they came out with an EPS loss of 6 cents a share. Analysts were expecting almost a loss of 32 cents a share. Phenomenal beat for Roku on the profitability side. Revenue 1.06 billion. Analysts were expecting 1.02 billion, beating that mark by about 4.5%. So these numbers have been steadily increasing, and that's why, in my opinion, I do still like Roku. Now we can see that we came out, it was 2017, and as it continued to gain popularity, you can see the stock went all the way up to almost $500 a share, and then obviously pulled back and just flattened out. So in my opinion, this is what happens sometimes with these stocks when they get overinflated, which is why, again, I just kind of throw a little caution out when we talk about some of these heavily overinflated prices and valuations, in my opinion, on certain stocks, i.e. Nvidia, Palantir, even Airbnb back in the day when we looked at it. When these stocks get too big too quick, what happens is, even if they continue to grow and beat earnings, we eventually have to come back down to reality. And you can see this is the tail end of 22, and we had a run up, but then we had a pull back, and now we have a slight run up again. So you can see it kind of really hasn't done much for almost 2 years. And now that the numbers have potentially caught up with the valuation, now if we get maybe another 1 or 2 earnings beats, now we're going to potentially break out of kind of the sideways channel here and start to run back up into the 100+ mark and get back kind of to where we were. But in my opinion, I think the numbers support that move. The earnings have been phenomenal. And Roku TV gained retail presence and sales during Black Friday, as noted by Wedbush. The report showed an increase in both product selection and sales compared to last year. We currently have a market cap of about 11 billion. You can see the EPS has been significantly better than what analysts have been expecting over the last couple of quarters. Annually, the revenue has grown very nicely. We saw the losses start to come in, and now if we switch over quarterly, we can see that the revenue is steadily increasing, and look at that net margin percentage. Was minus 8% just about this time last year, and then less than minus 6, minus 3.5% for last quarter, less than minus 1%. So we may be right on the cusp inside of the next 1 to 2 quarters of this company turning the quarter and posting a positive net margin, which technically, in my opinion, should really help drive the stock up even higher. But let's look at our fair value, quote unquote, the way I like to look at it anyway. We can see that something like the debt here, 663 million down to 654, 639, 627, 613. So we're consistently paying down that debt, excuse me, while maintaining about 2 billion in change cash on hand. We can see cash right here, 2.04 billion, up to 2.07, 2.1, 2.1, 2.13. Debt consistently decreasing, cash holding and increasing. We currently have assets outweighing liabilities in both the short and the long term. So if we look for our fair value here, debt 613 minus 2.13 gives us positive 1.5 billion. Let's switch over here to the balance sheet. And we can see that assets had a dip down for several quarters and have since kind of been rebounding. The equity was 2.65 billion, comes down to the very low 2.3, and then slowly starts stepping up for about the last 5 quarters in a row. Equity now sitting at just below 2.5 billion. So we were at what, 1.5 billion plus 2.5 billion equity brings us to about 4 billion. And even if we look at last year's numbers, even though they've improved even more for 24, we can say, what were we at, 4 billion? And now we have a loss of 700 million on 3.5 billion, which brings us to positive 2.8 billion plus 4 billion, in my opinion, puts fair value, quote unquote, of Roku's business at 6.8 billion. So in my opinion, that is the fair value of this business right now, about 6.8 billion. Hold on, I need a sip. Oh yeah. So 6.8 billion. Current market cap 11 billion. Now, based on the growing popularity and the consistency of the earnings, the growth of the business, in my opinion, I would think conservatively we can put a 2x valuation on the quote-unquote fair value, which, what did we say, 6.8? So that would be 13.6 billion, which, as you see, would be about a $2.5 billion market cap rise from this current point, roughly about 20%, we can call it. But again, if we keep posting positivity, then we can increase that ratio even more and probably take it to potentially 2.5, 3 times quote unquote fair value. So in my opinion, I would probably expect this market cap to eventually get to about 15, 16 billion, in my opinion, which would be about a 50% rise from here, which would be roughly 37 points and change from a $75 stock, which would bring us to, what is that, like $112 or something? So, in my opinion, I'll go on record, I'll say that, in my opinion, that's my price target on Roku. You know, 110 plus, 112. Because really, again, if we look at it, a lot of these metrics are moving in the right direction. We have all of our return percentages now just slightly negative, single digits, and we were over here minus 20, minus 30% at times. You can see something like the gross margin percentage was sub 40%, got above 40, got up to about 44.5, took a dip back down to 41, slowly started climbing. As of last quarter, 45.2. technically the highest it's been going back about the last 2 years. Operating margin percentage, same thing, was bigly negative, 28%, gets up to minus 7%. It's been holding the negative single digits for 4 quarters in a row, and now as of last quarter, operating margin is only at minus 1.6%. So we're very close to turning positive on the operating margin percentage as well, which technically is a big green flag in my opinion. EBITDA, again, earnings before interest, taxes, depreciation, amortization. We can see minus 25% roughly. Goes to minus single digits, 4 quarters in a row, and now as of last quarter, positive 5.73%. Net margin percentage, we were losing over 27%, minus 36% at times. Bring it up to negative single digits, now as of last quarter, less than minus 1%. So, in my opinion, in the numbers, I think this one looks pretty good. And similar to what we saw with PayPal, right? I know recently PayPal had a little bit of a climb out, and, people were commenting, yeah, good eye, great call. It was beaten up even though they were beating earnings, and it looked, you could make the argument it looked undervalued in the numbers. So a lot of people were buying PayPal down in like the 60s and the 70s, and then you just slowly watch and wait for it to climb back up into the 80s and to the 90s. And that's why, in my opinion, I think we have something similar here with Roku. So even if we don't move much, maybe over the next quarter or so, in my opinion, over the long run, based on what they've been reporting on earnings, and of course the updates that we're seeing, time spent on Roku and whatnot, this is why I think, in my opinion, we have a good grower here. We don't pay dividends. If we look back the last couple of quarters, we can see the EPS has been great. Revenue has been coming in well above analyst expectations, expecting about $1.14 billion to close out 2024. And then obviously after that, we're looking to maintain that $1 billion plus milestone mark. And you can see we just came from $900 million. Over the years too, this is pretty good growth annually. Going from 1.7 billion to 2.7 billion to over 3 to almost 3.5. Now we're expecting to close out 24 at over 4 billion, 4.6 over 5, almost 6. So we're expecting this growth to continue as of right now in the moment. And that's why I say when you have a situation like this, in my opinion, it's a good idea to buy into the growth if you can get in at a fair or undervalued price and just ride the wave. And then, of course, if we start to see like mid-25, all of a sudden, they're missing earnings, or, the revenue may have plateaued. Now, all of a sudden, we're expecting to drop down and have a pullback over the next 1 or 2 quarters. Potentially, that's when you may want to book profits, move on to something else, or just keep it on the watch list and wait for it to have a big sell-off, and then maybe try to reposition yourself again. In my opinion. But overall, been growing nicely. Let's get into some of the news. Trade Desk shares are on the rise. Yes. Possible merger with Roku. This was a hypothetical situation thrown out by an analyst over at Wedbush. But if we read it, in my opinion, actually does kind of make decent sense here. Analysts and investors are speculating on the potential strategic alignment between the two companies as Trade Desk recently announced its entry into the connected TV operating system market with its Ventura operating system. Team at Guggenheim, okay, emphasized that combining Trade Desk demand-side platform with Roku's operating system streaming household footprint, estimated at more than 85 million globally, could yield mutual benefits. He stated that the merger would accelerate the Trade Desk's OS ambitions while enhancing Roku's ability to monetize its advertising inventory. Also addressed the potential challenges of such a merger. Noted that Roku is a controlled company with CEO holding a significant voting share, making his approval critical for any acquisition. Additionally, he pointed out potential conflicts of interest for the Trade Desk, particularly in ensuring fair treatment of advertising buyers if it were to acquire The Roku channel inventory. Included the benefits of consolidation outweigh the risks. Merger could create a stronger entity capable of competing with tech giants like Alphabet and Amazon. Yep, this came right after the announcement of Trade Desk's operating system, was announced about 2 weeks ago. While there is no confirmation, the market's reaction reflects optimism about the potential synergies a merger could bring. I mean, in my opinion, might not be the worst idea. I mean, you're trying to enter a space, and as they say, Roku has been gaining more and more market share in the space and has so many eyes on it now, so many households utilizing Roku. Why not team up and just kind of roll out your new OS with them? In my opinion, it does make sense, but of course, anything can happen. This was just, again, a hypothetical idea that was tossed out there, but the market seemed to react positively. Significant barriers. Ventura represents a competitive threat to Roku. It also underscores the overlapping goals of both companies. He noted Amazon and Alphabet's vertically integrated dominance in the sector is a shared challenge for the Trade Desk and Roku. Yep, this is the same article. Trade Desk and Roku both rose more than 5% in early market trading. Very interesting. So, for all we know as well, this might not have been something that either one of these companies were interested in. But if you see if I just bashed my knee. But you see if the market reacts positively, then, this is an option that they might keep on the table. We're reading 85 million. Revealed, both of them revealed on April 24 a data-driven TV streaming collaboration. This cooperation lets marketers utilizing Trade Desk use Roku's audience and behavioral data, hence improving campaign planning and measurement for TV streaming consumers. Trade Desk debuted a new streaming TV operating system called Ventura as early as 25. Collab with smart TV makers and other streaming aggregators to use Ventura. Roku has included the Roku channel within Google TV so that consumers may, straight from the Google TV interface, access to Roku's large movie and TV program collection. So that could be something potentially on the horizon here. Black Friday online spending rises to $10.8 billion. Oof. We're reading... Roku leads U.S. connected TV market as competition grows. With the dominant operating system in the connected TV market, particularly in the U.S., though rivals loom. This is from UBS. With 50% of the market share in U.S. streaming household, Roku benefits from the shift in ad spending to streaming from traditional television. Company faces competition, of course. Deep-pocketed tech platforms. Yeah. UBS initiated Roku stock neutral, price target 73, basically right where the stock is right now. Upgraded to a buy. Oh, Zacks, okay. Zacks, I guess now they personally put a buy on Roku. Yep, okay. Roku stock nearly priced in with analyst target price amidst strong growth potential. Just received an upgrade by Baird from neutral to outperform. Price target raised to 90. This was, again, about a week and a half ago. It's about 2 weeks ago. Baird saw the fact that there was an increased confidence with this market. ARK investment. I know a lot of people like to talk about ARK. Also included Roku among its favorite stocks for year 2025. By holding the stocks, that accounts 7.66% of ARK's total portfolio. Roku experiences more advertising revenue as more advertisers shifted their spending towards streaming platforms, with more consumers turned to streaming contents now. Average price target 26 analysts, about $80. Highest price target 116 right now, lowest of 55, which in my opinion I think is extreme, which is probably why the both times that the stock recently broke into the low 50s and almost immediately bounced back, and everyone stepped in and bought the dip. Now, in my opinion, down in the 50s is a little extreme. You know, if markets sell off, you want to pull this back down into the 60s or something, in my opinion, it makes sense. But I do feel that the numbers look pretty solid and stable and consistently grow here for Roku. Okay, we're reading. Roblox taps former Roku exec to aid advertising push. Yeah, because they see that Roku knows what the heck they're doing and their numbers are consistently growing. So yeah, of course. If there was a former exec at a company like Roku that had this kind of track record, absolutely, in my opinion, I would tap them as well. Barrett upgrades Roku to outperform. We just read that. Outperform. Yep, we read that. Okay, I just want to go back towards the end of October when they actually released earnings. Sells 200 shares. Maintained that underperformed by Jefferies. Wild. Equal weight by Wells Fargo. Price target raised from 72 to 74. Though Roku posted its first $1 billion in quarterly sales, its Q4 outlook fell below Wall Street's estimates, which led to its share price dropping 16%. With an adjusted EBITDA of $30 million, the media streaming company forecast a gross profit of $465 million for the current quarter, both missing analyst projections of $477 million in gross profit and $36.2 million in adjusted EBITDA. It's amazing how they're coming in so well above the revenue estimates. They significantly cut costs. They're coming in significantly more narrow than Wall Street's EPS projections, yet at the same time somehow falling short of the profits that Wall Street was also projecting. That just kind of throws me for a loop as well. That's why I laugh again when I mention certain stocks like Nvidia, who are supposedly taking over the AI space, having massive demand, revenue doubling, tripling, yet somehow, some way, the estimates are always significantly lower than what Nvidia actually posts. And yet we have a company like Roku who's knocking EPS and revenue estimates out of the park, but also on the flip side, they missed on gross profit. Their EBITDA wasn't as high as we expected. It just throws me for a loop. That's why, again, in my opinion, the fact that I feel the company is growing overall, and you may have, I guess you can say, one or two slight negatives in the mix that may keep the stock down. In my opinion, for the long term, I would personally view that as an opportunity, not really as a negative. The earnings release also indicated changes in Roku's key performance indicators. Beginning Q1, Roku will no longer provide streaming household figures in line with Netflix, which lately revealed it will stop sharing membership information next year. Rather, Roku will mostly measure streaming hours, platform income, modified EBITDA, and free cash flow. Well, we just kind of read as well that Roku is kind of dominating the household figures. So, again, Netflix has been raging, up over $900 a share. So, doesn't seem like anyone got too upset that Netflix said that they will no longer provide those figures. So, Roku saying they're not going to, in my opinion, I really don't think that's an issue. Quote, since our IPO in 2017, the streaming business has evolved significantly. Americans now spend more TV time on streaming than on cable. Our company has also changed, mostly with an eye toward increasing profitability and platform revenue. The decline follows Roku's prior 3-month rally over 30% in response to forecasts for platform revenue expansion and ad market strength. Maintain hold at Loop Capital. Price target raised from 65 to 70. Piper Sandler neutral. Price target raised from 60 to 75. Okay. Company reported sales of $1.06 billion, representing 16% year-over-year growth. Platform revenue $908.2 million, up 15% year-over-year. Devices revenue, 154 million, up 23% year over year. Average revenue per user of 4110 on a trailing 12-month basis, which I believe they said remains pretty much flat. But again, I also said, in my opinion, I don't remember if it was Roku or if it was maybe Fubo we were talking about, where the average revenue per user dipped and they were expecting it to increase. But again, we also noted that the amount of users significantly increased. So that's why I say, again, in my opinion, the average revenue per user, we may see, a certain metric like that on Roku and Fubo that may remain flat or go down, but you'll notice that on both of those companies, you're seeing consistent growth, not only in revenue, but in subscriber growth as well. Roku also reported other key pieces. Free cash flow, 155 million. Said the quarter marked its 5th consecutive quarter of positive free cash flow. Fantastic. 85.5 million streaming households. That's crazy. Up 2 million quarter over quarter. And streaming hours of 32 billion. Streaming hours were up by 5.3 billion hours year over year. Roku also provides an outlook. Anticipates fourth quarter revenue of 1.14 billion, adjusted EBITDA 30 million. Rosenblatt raised price target from 61 to 86. Needham reiterated a buy, maintain $100 price target. I respect it. Maintain outperform rating, maintain $90 price target. Yep. Now, I remember also, again, a couple of quarters ago when we did like our first or second video, I remember some people came out and said, it's overvalued, some of the numbers are rough, they have losses here, losses there, so I think the stock stays down. So, again, kind of an understandable argument, which is why I feel you had some people beating up the stock, and then when it got too low, you had people piling in on the value basis, and, and then the short sellers would hit it, and then it would drop down, and people would pile back in. So, again, a lot of people may have lost faith right here, back in the beginning of August. Down here at 48 1/3, right? And then you turn around 6 weeks later, and the stock's almost at 80. So this is why, again, this is a company that I understand could come down. I understand that argument, but also at the same time, the fact that the numbers have been so stable, this is why I feel that even after a dip with earnings, you usually see it kind of bounce and rebound right back up to where it was, if not higher. Narrower than Wall Street expects. Revenues increase year over year. Okay, I just want to make sure we didn't miss anything here going back to the earnings. Greater engagement, more monetization opportunities. Roku OS was again the #1 selling TV operating system in the US. TV unit sales greater than the next 2 TV operating systems combined. That's what I mean. You read something like that, but then you try to kind of take the stance that the stock should be going down. Again, in my opinion, I'm not seeing it. I'm not seeing it. In my opinion, this stock should be, again, especially in a market that we're keeping up here at highs, we're consistently making new highs. People try to tell me it's all about technology. I mean, Roku apparently is one of the dominant players in this space. And they're consistently beating EPS and revenue estimates. 85.5 million households. This is why I'm saying, in my opinion, stock might be doing much. It might, be sitting here remaining flat. They might bring it down. In my opinion, I would view that as an opportunity. Roku OS was also the #1 selling TV OS in Mexico and Canada, taking over North America. Look at that. Streaming hours up 20% from the prior quarter. Quarter, not year. From the prior quarter. For the record, I do not have a position in Roku. Okay, I'm reading. Yep, their show, NFL Network. Platform revenues, which account for 85.5% of revenue, increased 15.5%, we'll call it, year over year. Devices revenue rose 23% year over year. Operating expenses decreased over 28%. As a percentage of total revenues, the metric contracted to 48.5% from 78.8% reported in the year-ago quarter. That's what I mean. Like, I understand there may be 1, 2, 3 areas where some of these metrics may have gone down or they may have missed estimates. But again, 8 out of 10, 9 out of 10 other metrics are up. Not only year over year, but even quarter over quarter as well. R&D and sales and marketing expenses decreased 36.6%, excuse me, and 23% on a year-over-year basis. General and admin expenses increased 22% to $99.9 million. In my opinion, that money saved here is nothing compared to the money increased here. Adjusted EBITDA was $98.2 million against adjusted EBITDA of $43.4 million in the year-ago quarter, more than doubling. 5th consecutive quarter of positive adjusted EBITDA and trailing 12-month free cash flow. Operating loss $35.8 million compared with an operating loss of $349.8 million in the year-ago quarter. So they brought these operating losses down by roughly 90%. Cash 2.1, they had 2.05. As of September 30th, 2024, Roku had no long-term debt. Roku currently carries a Zacks rating of buy. So, basically we don't have to keep going with this, but I just wanted to go back and look at, any news articles that caught my eye, and of course just double check those earnings that came out a couple of weeks ago, because again, unfortunately, my apologies, I wasn't able to get to this. But again, Roku, in my opinion, overall, I think it looks great. I really do. And listen, if you disagree, of course, I always keep an open mind. Let me know in the comments section why you think, the stock should come back down into the 60s and the 50s. If you think it's overvalued, if you think they still have some obstacles to get past maybe, and it might take, 2-3 quarters for what I'm saying to potentially come to fruition. But, also if you like the company, let us know in the comments section as well. But we'll look at stock charts real quick. We'll let you go. We can see RSI here on the daily, about 56, middle of the road. We had that big spike up, obviously, on that. No, that wasn't the analyst announcement. That was back in November. That was, like 2 weeks ago. So we had the cross here. We had the MACD cross to the upside and just catapult the stock back above the 50-day moving average. And we can see today we kind of bounced up and down, but we're still technically above the 50-day moving average. However, recently from last earnings, you can see the last time we got up, we kind of held for a little bit and then it came back down to test and then broke. So I'm curious to see how long this actually holds up, but the MACD crossing to the upside may obviously help drive the stock back up into the 80s. So only time will tell. And we can see here on the weekly as well, we were climbing up nicely above the 50-day, and then we dropped down, essentially flattened out, basically evened up with the mid-Bollinger Band and the 50-day here on the weekly, and then we had the big bounce, stock up almost 10% this week so far. MACD relatively flat, but again, technically, getting above the 50-day moving average on both the daily and the weekly now should really indicate more bullish momentum. And we can see the last time the stock popped up and closed above on the week closed above for the week, above the 50-day moving average. You can see that it continued for several weeks afterwards. So that's why, we had the step up, break, and then we come down to retest, flatten out, cool off, and then we have a break, potentially, step up, and then we come down, cool off, right? So that's why, in my opinion, in the short term, I'm expecting a run-up to 80 plus, and I think I had, 81.80 was one of the marks. RSI on the weekly, same thing, basically middle of the road, 56 and a third. Top Bollinger Band, about 84.5. And in my opinion, if it does happen to break up and out and start heading back to that psychological $100 level, we may see a push back up to something like this 200-day moving average of 138. Now, in the numbers, that may kind of overinflate it a little bit. But again, we see a lot of companies, especially in the tech space, trading at pretty high and healthy multiples. So for me to sit here and say, I think Roku's worth, what did we say, 6.5, 7 billion. You can put, a 2-3x multiplier on that. In my opinion, in this market, I think that's extremely conservative. And I'm sure a lot of you would agree with me on that. But my main concern here is, right, since earnings, we had the drop and then we ran up and then we retested the fib, right? Looks like almost a double bottom and then we run up. So right here, it looks like we're in a potential symmetrical triangle. But again, now that we just got above the 50-day moving average as well, I'm not certain if we're going to have another pop and a potential retest of this fib right here of about 78.56, which would then adjust this trend line to something like this, which would then potentially cause a rejection and put the stock in a 8 and sorry, too much coffee. Would put the stock in a potential ascending triangle, which would help pop it up and out. So this is why, unfortunately, on the tech side right now, I mean, I could kind of go either way, in my opinion. In the numbers, though, again, I stand by my analysis. I think the stock is worth $110, $115, somewhere in that range. And we'll check the pivot points real quick. Okay, we got a main pivot point right here, 79.83, which we can see we ran up to. Last time we got above the 50-day, and that's basically right where the rejection came. You can see the slight retest immediately, and then the following week after. And now you can see how we're kind of coming back up to it. So that's why I think first we have to get above this fib, obviously, and then we could potentially retest that pivot point. And then if we do, and we're seeing the breakout of this potential ascending triangle, then we may see the pop again up here to above 80 plus. And then after that, obviously, it's 120, but that's on the weekly. If we switch over here to the daily as well, you can see we have a pivot point right here at 77.40. Stock hit 77.70 and then pulled back. So this is why I'm saying, again, we could potentially run up and even get above one or two of these pivot points, but it may also be forming this ascending triangle. So a couple of things just throwing out for you to keep an eye on in the technicals. But in my opinion, again, right here, you can see this is the previous pivot point for last month. And if we go right in the middle, you can see 81.87. My trend line drawn out, 81.80. So again, in the immediate short term, this is why, again, trading is much more of a pain in the ass than investing, right? Because from an investment standpoint, in my opinion, $100+ stock, you got the potential to make, 30, maybe 40% over the next several quarters. So in my opinion, as an investment, I like it. As a trade, again, who knows? We just spiked up. We even got above this trend line as well, coming down across this resistance trend line. So now we may reject and come right back down. So even though it looks good in the numbers, in the technicals, we may have a pullback. And if you stepped in on a call, you may get burned. So that's why, again, in my opinion, it's obviously easier to just play the long game. But I know not everyone is in that boat. But yeah, I spoke for too long. But that's pretty much it on Roku. And I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.